Welcome to the Crypto Layer HQ. Today we have had some strength going into the 2nd of March. As discussed in previous videos, we did say that we might end up having some strength in March and potentially finding a local top, maybe in March or even early April. And I wanted to discuss what levels we might reject at and potentially how much strength we will get before putting in a local top and rejecting further. So if we look at the weekly, we can see that we've already had 1, 2, 3, 4, 5, 6 red weeks in a row. So it does mean that it's starting to get to a point where it is, statistically speaking, likely that we will get a green week, since we don't usually have more than 6, 7 red weeks in a row. And if we do look back in the 2022 bear market, we can see that in March we did have some weekly strength, as you can see on the 14th of March 2022 and 21 of March 2022. On the weekly, we had two big green candles, which gave us about a 25% rally. So we could end up getting some strength in March for sure. And if we look even back in 2018, we can also see in February we had some strength, and then the top was put in March. So there is a decent chance that we do end up getting some strength and potentially putting a top in March. If we look at the monthly as well, we can see we've now had 1, 2, 3, 4, 5 red months in a row. So as well, statistically speaking, there is a good chance we do end up getting a green month, since every red month reduces the chance that we continue getting more red months, since just statistically speaking, it is unlikely to have more and more red months. If we look at potential points we could reject at, so there is the obvious critical level we had at 74k, which acted as resistance back in March of 2024 and also acted as support in April of 2025. And it also was a level that once we broke under, we very quickly broke down all the way to 60k. So this is definitely a level we could end up testing. And then I would say the next level is about at 80k, since that was also a pretty strong support level here. And in March of 2025, you can see we supported basically 2 times and kind of held around that level. So it did act as a good support. And we can see even in November of 2025, we did end up wicking to 80k and then bouncing. So that is definitely a level we might end up rejecting from. Also, just 80k being a whole number is also a psychological level that once people see 80k again, it definitely acts as a psychological level in terms of FOMO buying and potentially even selling at what they see as a good price, since they haven't seen 80k for such a long amount of time, even though we were there a few months ago. But potentially people who are underwater in positions that they've been holding from 90k or 100k, they want to get out, so they can potentially see 80k as their final chance to get out. The next point we could end up retesting could be even 86k. I would say I think it is unlikely we go above 86k, because this was also a major level. We can see it acted as support back in December of 2025. We bounced off it many times, and then once we broke below it in January of 2026, we kind of free fell. And even if we look back in March of 2025, it did act as a pretty major level where we did reject off in March of 2025, and it did just get rejected many times. And once we broke above it, then we ended up rallying. So definitely I would say these are the 3 main critical levels to watch. If we do end up getting some strength into March, maybe even early April, these are the levels I would be watching. If you are wanting to de-risk, potentially if you're still holding a position and you didn't get chances to sell, this could potentially be a good chance if we do end up rallying into March, which I think there is a decent chance that we do, since even if we look back in 2024, the 60k region did act as a big support zone. So it does make sense that now we potentially end up bouncing from it. I would say there's many things pointing towards getting a potential bounce. But of course, predicting short-term price action is very difficult. So it will be interesting to see how things play out. And then I will say, once we end up projecting from that level, I think the higher we end up going, the harder the rejection will be. And we will probably end up projecting into the months of April going into May. And then we will most likely end up seeing lower prices, as whatever strength we end up getting in March, maybe early April, will probably end up just being a local high and then getting further rejection in the bear market, which we are currently in, to maybe getting into the 50Ks or even potentially high 40s by May time, maybe even June, July, as we go into the summer months, where usually things end up getting a bit slower and we often see weakness, especially in bear market years. So these are the levels I'm watching. It'll be interesting to see which one we end up going to, because I do definitely think we will get some rejection, and that'll potentially bring us to our next leg lower, where we might end up seeing some more consolidation, and then we could end up consolidating for a few months around this zone, and then potentially end up going lower into Q4 of 2026, maybe even seeing the 40s, which would be a 65% drawdown from the top, which is very possible considering last cycle was a 77% drawdown, and with diminishing returns we end up getting smaller and smaller drawdowns, but also smaller upside. So this could definitely be a path that ends up playing. But of course, like I said, it's better to try and manage your portfolio in a way that handles the general direction of the market, which so far has been down and will probably continue to be, as opposed to trying to trade these short-term moves, because there's nobody out there that knows exactly what's going to happen over the next couple days or weeks or even 1-2 months. So trying to trade that is very difficult. So try to manage your portfolio in a fashion where, when we're going into bear market years, potentially you could reduce some exposure, and then once we start to get more attractive prices in end of 2026, you can then potentially be more risk on, as we generally start to see some more strength in 2027 and moving forward.